Ladies and gentlemen, good day and welcome to the Aurum Proptech Limited Q3 FY2024 results conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vanessa Fernandez, Investor Relations, Aurum Proptech Limited. Thank you and over to you, ma'am.
Thank you, Lizanne.
Ladies and gentlemen, the lines of the management has got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, ma'am.
Thank you, Lizanne. Good evening, esteemed participants, and a heartfelt welcome to the third quarterly earnings call 2024 of Aurum Proptech Limited. It's truly a pleasure to have you all on the line with us today. On this call, we are privileged to be joined by Mr. Ashish Deora, the visionary founder and CEO of Aurum Ventures, Mr. Omkar Shetye, our accomplished Executive Director, and Mr. Hiren Ladva, our insightful EVP Investments at Aurum Proptech. As we navigate through the financial highlights of the quarter ended December 23, we will also share some exciting updates on the performances of our businesses. Before we delve into the details, I would like to emphasize that any forward-looking statements we discuss today are accompanied by risks and uncertainties outlined in our prospectus and annual report. To gain a comprehensive understanding of these risks, we encourage you to refer to these documents available on our website. Without further ado, let's initiate the call with Mr. Ashish Deora.
Thank you, Vanessa. Good evening, everyone. It is my pleasure to welcome you to this 11th earnings call of Aurum Proptech. I wish all our participants a very happy 2024. Continuing in our third year, having committed to bringing technology in the real estate sector, it gives me immense confidence that our purpose of creating an integrated PropTech ecosystem is getting more refined and yielding the desired results. With each passing quarter, Aurum has consistently showcased sustainable revenue growth. Since inception, we have been focused on unit economics and profitability. This ensured that we were sensible with our capital deployment across our products and partner companies. We have our eyes set on 3 specific PropTech opportunities now in the form of rental, distribution, and capital businesses. Let me talk about the metrics we are targeting for the upcoming quarter. In the rental space, we are targeting to manage 30,000 plus units by Q4. This solidifies our position as the largest residential rental management platform in India. Also, by the fourth quarter of 2024, in the distribution space, our business would have ensured sale of 3,000 plus apartments and subscription of 8,500 plus CRM licenses. We would have generated 150,000 plus qualified leads of home buyers across the country. In the capital opportunity, we would have facilitated INR 600 plus crores of real estate investments and housing loans within this quarter. I would like to state that all 3 businesses are growing with unit economics in mind. Moving on to Nestaway, at the end of Q1, we set an ambitious goal to achieve profitability for Nestaway by year end. I am pleased to announce that we have successfully reached this target through our dedicated approach. Our next organic move is to now deploy capital in Nestaway to propel the business into a hyper-growth trajectory, aiming to manage over 50,000 plus rental units at the earliest. Our resolve to dominate the residential rental market, which is estimated at an annual recurring business of $25 billion has further intensified over the past few quarters. Moving forward, we are delighted to share that we are EBITDA positive this quarter. It showcases our unwavering commitment to building businesses with profitability and sustainable unit economics. This success is a result of our laser-sharp focus on maintaining EBITDA as a constant North Star metric. From the outset, profitable growth has been our guiding mantra, and this principle will continue to drive our endeavors throughout the calendar year of 2024. In the past 3 years, we have diligently expanded our capacities across various business offerings, resulting in sharper business metrics and a more evolved understanding of our industry. Looking ahead, we anticipate doubling the revenues of some of our products in the upcoming quarters, simultaneously also enriching our ecosystem through cross-benefits amongst all our offerings. At Aurum, we are gradually transitioning our journey that began in July 2021 with a strategy of acquisitions and inorganic growth to now address needs across tech, capital, and services within the real estate value chain. We believe that our ecosystem will benefit the stakeholders in the real estate industry by accelerating tech capabilities. I would now like to conclude by wishing all our participants a very successful year as our country progresses towards a greater glory. With this, I now hand it over to Onkar to talk further on financial achievements and every other detail. Thank you, everyone.
Thank you, Mr. Devra. Aurum envisioned an integrated PropTech ecosystem that creates a seamless digital experience to help consumers across their real estate needs, including buying, selling, financing, and renting, serving as one ecosystem of connected solutions for all the stakeholders and needs of real estate and services related to moving. We have brought this vision to life through a sustained buy and build strategy across 3 clusters of tech, capital, services, and an integrated data strategy. Each product in our ecosystem achieved a key milestone during the quarter. Sell.do, our integrated real estate CRM, continues to drive immense efficiency in real estate businesses across the globe and has been ranked number 1 in the easiest to use category by G2. Beyond Walls, our broker aggregation software showed a 27% increase in the number of transactions registered on the platform, demonstrating a strong demand for tech-led institutionalization in the real estate distribution business. Analytica, our data analytics business, showed an impressive growth with 36% quarter-on-quarter increase in revenues and surge in new customers, a stable renewal rate, increased price per unit, and more units sold in the business. Monk.Tech Labs continued sustained growth with a 16% quarter-on-quarter revenue growth and 84% net revenue retention in Q3 FY24. Wisix and Integro also increased quarter-on-quarter revenues by 3.6x with a new feature and product launches. Hello World and Nestaway continued to enhance tenant experience and efficiencies in the rental and property management business. Nestaway remains India's top rental marketplace platform by recall amongst rental consumers. A huge effort went in ensuring customer grievance redressal and brand correction. The team tracked conversations across consumer forums and social media platforms and now has bettered the consumer sentiment. The sentiment has been bettered from a negative 35% to a positive 69% in the quarter. The team closed non-operational cities as a part of the restructuring program. The organizational design has also been revamped with right-sizing and efficient performance metrics. Nestaway 2.0 is now geared up to emerge as the undisputed market leader in Indian home rental sector, with primary emphasis on consumer experience and fortifying supply chain. By 2027, the team is targeting to reach 50,000 homes under management, with a focus on Nestaway becoming the ultimate one-stop solution for everyone seeking a rental home in India. Let me start the financial results by underlining that we reported positive EBITDA this quarter with a 37% year-on-year increase. Of the last 5 quarters, we have reported positive EBITDA in 4 quarters. The only quarter reported negative was the Jazz 24 in which Nestaway was acquired. This defies the trend of surmounting losses in most technology businesses. In a noteworthy achievement, we are excited to announce that as of December 23, we have turned around Nestaway's losses completely. This is an astounding feat considering Nestaway was at negative 85% EBITDA pre-acquisition in June 23. This was achieved with a 5-step strategy of Nestaway cleanup plan. The team rationalized tech and infra costs, redesigned the org structure with focus on right sizing, refined customer acquisition and servicing strategies, addressed consumer grievances, and had a strong redressal mechanism. This helped us reduce aggressively losses and at the same time ensure sustained GTV at INR 41 crores and a net revenue of 7.7 crores. Total income for the quarter at PropTech increased by 51% to INR 62 crores. This is a 1.5x year-on-year increase in revenue from operation. A core contributor to sustained performance was residential rental revenue products and platforms which grew by 2x. Despite an increase in revenue, we are ensuring a tight control on expenditure, which has not increased over the last quarter. The teams are constantly working on ensuring tight control on unit economics with enhanced consumer experience and operational efficiencies. With this, I will now pass on the call to Lizanne to open the floor for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Nihar Shah from Crown Capital. Please go ahead.
Yeah, hello, good evening, sir. My question is regarding the roadmap. We have stated on slide number 22 of our presentation that we have a 3-year strategic roadmap. So can you please elaborate on that? Like, what's the roadmap like? What's the growth we are looking at?
Mr. Nihar, this is Hiren this side. Thank you for your interest and the question. So, basically what we have put up on the investor presentation is an indication of what we are working towards in terms of a 3-year strategic roadmap. And in terms of the outcome, we are finalizing what the outcome will look like and come back to you in detail in terms of what that roadmap looks like. But at a high level, we are looking at, multiplying our revenues by multifold by 2027, March 2027 is our goalpost that we have all taken up from bottom up from all different businesses. And the numbers that we have are fairly achievable numbers in the market given the way the tailwinds are there in the property sector coupled with the tech developments that are happening, right? But the exact figures and exact roadmap we will be able to communicate subsequently. We are not allowed to give forward-looking statements that is prohibiting me precisely to give you the numbers. But overall, as I said, we have laid down our path on 3 specific aspects. One is what is the top line that we are going to chase, which, as I've said, is a multifold from what we are looking at the current revenue. Second is the milestone to achieve PBT level profitability at the console level, right? So we will also come back to you with the exact quarter
that we are gunning and planning for that. And third is the overall business portfolio planning in terms of which are the opportunities in the PropTech canvas that we see that we should be targeting, and then where we would like to develop our market leadership, and with what and how are we able to quantify that leadership, right? So these are the three main I would say goalposts that are part of the 3-year strategic roadmap.
In addition to Mr. Ladwa's statement, we would like to emphasize that we see three large opportunities. One is in the residential rental space, where we feel between the businesses of Nestaway and Hello World, we should be able to increase our market share and provide a marketplace solution for all rental needs on the residential segment side. The second is on in the monetization segment is the CRM and the broker aggregation space, is where we also see good opportunities coming in. In addition to this, not just the revenue plan, but we have also focused on ensuring how do we increase the revenue stack, and how do we ensure that we have cross-platform data integration and better unit economics by leveraging customers across the ecosystem at PropTech.
Okay, sir. Okay, that was my only question. Thank you, and all the best.
Thank you, Neha.
Thank you. The next question is from the line of Deepak Singhal from Valtech. Please go ahead.
My question is that are we focused only on revenues, or what is the plan for break-even?
So, I would like to reiterate that right from start of Aurum Proptech's journey until now, which is from April 2021 to now, we have gone on to aggressively build revenues, but at the same time, revenue has not come at an exorbitant cost of losses, like you see typically in the tech businesses. If we see our last 5 quarters, we have been positive in 4 quarters at EBITDA, and only 1 quarter was at an EBITDA negative, which was in the July, August, September 24 quarter in the Nestaway acquisition. We will continue this approach of ensuring that we grow our businesses, but not at an exorbitant cost of losses. And we have demonstrated that successfully in businesses like Nestaway, where our first milestone was to ensure that we are able to control the losses in that business. And Nestaway is a great platform which has got the top recall value in the rental marketplace space. One of the topmost brands in PropTech in India. However, it was at a minus 85% of EBITDA negative when we acquired it. And from then to now, we have aggressively gone on to address measures which has not only controlled costs, but it has brought it to a break-even. So yes, we are cognizant about what happens in tech businesses and with respect to growth at the cost of losses, and we will not be taking the same path on growth.
But to add to what Onkar said, this is Ashish here. This has been a constant sort of endeavor of the company to be very, very prudent and careful about the expenditures and about the losses at all, right from very beginning. So we are happy to continue to be on a very high growth trajectory, but definitely it won't be at the cost of any losses or any cost of cash burn.
Okay, thank you. And my next question is, any dates on when we are planning for calling for remaining money for partly paid shares, or as of now, no such plans?
So again, this is Ashish here. This is something that we are planning to do it within the first half year of 2024. So definitely in next 2 or 3 months, this process would have started, and we are looking to consummate the calling of the second tranche of our rights money before June 2024.
Thank you.
Thank you. The next question is from the line of Bimal Panchal from Bimal Panchal and Associates. Please go ahead.
Hello, good evening, sir. My name is Bimal Panchal. Congratulations for the excellent results. And your presentations and as well as opening statements are very optimistic and seems to be realistic. Lots of questions have been asked by predecessor questions, so there's no much questions. Call money, you said you are in the second half of 24. But on this partly paid shares and fully paid shares, there's a spread which is on a large scale basis exists at always 10 to 25 rupees, 10 to 15 rupees spread is there, which always in favor of a partly paid. Generally what happens, people tend to sell fully paid shares and buy partly paid shares. So the partly paid remain has, but okay, that is not a lookout from the management, but just my observation. And my one question is that what is the percentage of sales and services of Aurum Proptech Limited in total Aurum Group?
Noted, Mr. Panchal. There are two. One was the observation. To your observation, we will not be able to comment as it is a function of market.
Yeah, right.
On the second question, sir, at PropTech, the entire stack of products that we have is on the build side, where first instance is to build a 0 to 1 in that business, whereas the buy side of businesses or the acquired businesses were at a 1 to 10 in terms of scaling up. Of the entire revenue stack, Aurum PropTech contributed in the quarter 1.6 crore of revenue for the in-house products, which were three essentially: Aurum Crex, Aurum Proberex, and Aurum InstaHome.
And
okay, sir.
Just to add on to that, the way we view all these businesses now, no more as in-house or kind of acquired businesses, right? So they are all part of the way what we are trying to build as the PropTech ecosystem, right? So we don't. And as you would have followed the numbers, all of them are majority stake acquisitions, few of them being 100%, right? So in a way, they are no more, their period of being considered as an inorganic business, except probably for the recent most being Nestaway, which is already 9 months old, right? So we no more see them as in-house and outside, kind of acquired businesses. They are all being part of or kind of nurtured as being part of the PropTech ecosystem that we are building.
Okay, sir. Sir, another question is, has new acquisitions are smoothly absorbed by the company?
So the way we bring the businesses into the ecosystem fold is that the management continues to run operations. They have full freedom to do that. We at Aurum level, we play an oversight on the corporate development part, on strategic oversight, on governance, risk compliance, etc. Right? So those are the areas where we play a role. We kind of bind them together in terms of a cohort and a cohesive joint strategy. Right? So that's where this functions. That's how these functions operate, and hence it's actually not really a tough task to onboard these businesses, right? So they continue to operate the way they used to, or they have been, except for like Nestaway, where we had to run a complete turnaround, right? So which is in the positive side, right? So that's some been our experience with all the businesses that we have brought into the portfolio.
Total number of employees, including that of subsidiaries.
Total number of
employees. Tentative figure.
Close to 800.
800. Okay. And To understand the operations and would it be possible to have some kind of a physical analysis meet or some sort of a facility visit? That will be better for the analysts as well as investors.
Mr. Panchal, I think as the interest level of the research and analyst community has been growing, we definitely are planning event of such a kind. We'll be really be honored and happy to have you and host, well-wishers like you and brief them about our strategy and the way forward.
That's right. Because many people are unaware about this company in spite of this residual business. They still consider a residual business of major scope. After that, lots of developments. They are not. Many people are not aware. So that will be a matter. Okay. Thank you very much, and all the best for the future. Thank you so much.
Thank you, Mr.
Thank you. The next question is from the line of Devesh Srimali from DF Investments. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir. Please proceed.
Yeah, hi. So quick questions around first would be the last call we sort of had aspirations of around 100 crore revenue in Q4. Just wanted to check trajectory-wise, do you think you are still on track to do that?
So, sir, your question is noted. There are two lenses that we looked at the business from. One is, of course, we now have good control on the unit of growth, where we know exactly where to spend and where to expand. But after Nestaway's acquisition, our focus was how do we first control the unit economics and bring out a break-even in the most premium business in the entire stack. That is where the focus went into. And we did observe that I think there are a lot of inefficiencies that come in when you chase growth at the cost of expenditure. The first port of call, that is why, was to make sure that we start building profitability in each business 1 quarter at a time. And the first port of call has been Nestaway, and we'll follow it up. Yes, because of that, our revenue growth has gotten a little calibrated. We would not say that we are shying away from the aspirational number of revenue that we had called out, but we have definitely calibrated our aspirations there so that we are ensuring profitability.
Wish to add to what Onkar said, when we were targeting the Q4 revenue of 100 crores, the goalpost changed a bit after acquiring Nestaway. We realized that reaching 100 crore Q4 revenue was very much achievable, but probably building business for a longer term and dealing with the unit economics at the earliest was more important, especially in case of Nestaway. And that is why we kind of delved into it, and you'll probably that is why you'll probably see that in 6 months, a company which was losing 42 to 45 crores of annual losses is now got restructured and has got profitable in the month of December. So we did change the goalpost a little bit internally after the acquisition of Nestaway, and the growth numbers are the revenue numbers are on the growth trajectory as well.
Sure, and one more point to add to it is that despite the calibrated growth numbers, we are still growing at a 100% growth over the last year. Our last year was 125 crore of consolidated revenue, whereas we have reported in this quarter we have reported a 248 crore of ARR.
Got it. Sure. That explains. Another would be if we look at year-on-year number for segments reported, the SaaS software as a service, it shows 9% type of growth. Can you help us understand how exactly you are measuring? Because in general, we would assume that SaaS as a segment would grow much faster than other segments. Just wanted some color on that.
So, sir, in SaaS, I'll give you a quick form to the kind of calibration we have done in the SaaS businesses also. Our SaaS business stack had two things. One is got calibrated on two things. One is the revenue stack and the gentry of the clients. We have consciously started taking lesser enterprise clients, which bring us larger form of revenue, and we have gone on focused on clients with smaller wallet size, so that we are able to de-risk concentration risk of revenue. So that's one calibration that has happened. Second is that we have gone on to add platform or marketplaces on our CRM businesses. So, for example, Sell.do, a great product on the CRM side, we have now added an additional marketplace. I mean, after acquisition, we have added a marketplace model of Beyond Walls, which is a transaction or a marketplace model on the CRM business. So that has got us a larger, I would say that has got us a different stack of revenue, which is more transaction based in a different product segment. The TAM and the TAM remains the same, which is the real estate enterprises or real estate developer and the broker community, whereas we've been able to have a product segmentation in this.
And just to elaborate on the second point, basically what happens is Sell.do is a developer targeting or real estate developer targeting CRM. Our strategy has been to deep dive into, as in double click on the developer community, and that's where both Beyond Walls and Analytica as the next line of higher revenue generating products have encashed on the existing customer set of Sell.do, right? So that's while we don't see specifically probably 100% kind of a growth in Sell.do, but from the same set of clients, the revenue growth has been much higher in the form of Beyond Walls.
Got it. No, that's understandable. And the opening statement, you sort of articulated that you have a 3-year roadmap which you will disclose at some point. But just wanted some qualitative color on that. When you say that you are sort of looking at multifold growth in, what is the base we are looking at? Is it going to be, this year ending revenue, or what exactly are the parameters you are considering for that roadmap? Just some color.
Yeah, definitely it's FY24 revenues, the projections that we have, right? So this exercise we did in the last week of December, last week of December and the first week of Jan. So we had some idea of the Q3 numbers and did some projections on Q4, and based on that, that has been taken as the baseline, right? So the multifold applies on FY24 number.
Also add to what Hiren just said is it's also now we feel that the company has over last couple years matured itself to make a decision and a discussion within all senior management team to start thinking about a 3-year roadmap. And to my mind, that itself was a sort of validation of the maturity that our companies and our products and our partners are starting to demonstrate. It was a very, very interesting exercise over 2 days in Mumbai in our Aurum office.
Got it. And the last one, if you could, we have a lot of information floating around the real estate cycle revival and things like that, right? And typically, the last few years, that's what they say. But in your experience as a company, how we are sort of exploiting, number one, the tailwind, which you probably have factored in your roadmap. But in general, what is the delta that you see from last year to this year versus going forward in terms of tailwinds? If you could sort of, again, some qualitative commentary, specifically in our context.
So, what you hear and see in the market, at the high-level metrics, 2 things are being tracked, right? What are the transaction closures, and second is what are the investments which are happening in the real estate sector. Now, earlier, as you would have heard from Mr. Ashish, how we are focusing on the 3 opportunities. The last two of them being the distribution opportunity and the third one being the capital opportunities. And so these two are directly linked to, the heightened activity that we are seeing in the overall property sector, right? And how so? So in our distribution businesses, what we do is we essentially first enable real estate developers to take their products to the market to their home buyers, specifically through 2-3 businesses that we have, which could be in the form of getting them potential home buyers as qualified leads, or in terms of digitally managing their transaction journey, and third, definitely the CRM, right? So that's one area that we see a good further revenue coming in terms of more demand for both qualified leads as well as transaction support. So that's the first area of opportunity. Second is in terms of the investments which are happening in the real estate sector, and there are both institutional investments which are very high ticket sized investments which are happening, and then there are HNIs who are willing to participate in this journey, right? So that's where our investment platforms, which are part of the Aurum as well as the Integro asset management company, we feel that there will be a higher interest from the investor community to participate in the real estate story, and there are many more reasons also behind it, and a lot of credit also goes to things like RERA and SEBI being absolutely supportive in terms of bringing regulations to give comfort to the investors, right? So these are some of the things which we have started seeing in the last couple of quarters in terms of investor interest in this kind of products, right? So that's something that we are banking on as far as the tailwinds are concerned. I'll also take an opportunity to talk about this space which doesn't get talked so much about in research reports and etc., which is the rental opportunity, right? So